Hey, fellow note investor. Are you looking to learn the basics of note investing so you can get started? However, you don't want to spend a few hundreds or thousands of dollars and hours online on some training program? Have you thought about attending a notes conference? However, you don't want to spend the money or the time away from your family. Well, we have a tremendous beginners video series of 20 different topics, with each video being less than 15 minutes. This means each video is less fluff and direct to the content. Visit www.jkpholdings.com/beginner-series to learn more. Again, www.jkpholdings.com/beginner-series.
We've got a 12 o'clock computer go.
All right.
11:59. We had seconds clock on this thing.
Will it? You set it up so it starts automatically?
Every time I do that, it's like 10 seconds off. And I'm like, so I'm like, I'll just do it manually. Just make it happen. So I never figured out. I'm like, I tested one time. I was like, oh, it's 10 seconds. Next time it was like 8 seconds. It's not even consistent. Crap. Okay. Hey everybody, Dave Putz here from JKP Holdings. Good afternoon, Nathan. What's up, man?
Hello, hello, hello.
All right. Well, hopefully
life is good, man. Life is good.
Hopefully we don't get any computer problem this week like we did last week, but we'll cross our fingers. My assistant will make sure I say this. If you guys like this stuff, we actually post our stuff on YouTube. We have a podcast. Go check out our YouTube channel. Hit the bell or reminder stuff. Make sure you get those things done so you can get anything we post on there. We also have the podcast, which records this, and you guys can tune in, listen to it on your drive or wherever you're at. So all done.
A lot of people will watch it later because they're at work or whatever.
Yeah,
that's fine.
We get a lot of watch later. You know, my Lauren say, check out. Say, Dave, look at this, man. And I'm like, well, I don't know if the live was like. He's like, but the recording is great. So I get it, right? Not everyone's home. Everyone's available. They're busy. And the information's always killer. Just talked to someone earlier today to like, dude, your lives are awesome. Just wish they were like at 6 o'clock at night. Yeah. All right. So I'm glad to see what's going on, man. I know that we've made some progress this week. We put a few more offers in on a few assets that were coming in from a different source. A couple Florida assets, Texas asset, a Missouri asset, and stuff like that. Some CFDs actually, and a couple firsts. But we're still working on some seller finance deals. How about yourself? Cool. What's going on?
I actually just went into contract this morning on, I was contacted by a seller who's got, it's a property in Oklahoma where the foreclosure is actually right at the end. They've got foreclosure auctions already scheduled in July. And they're willing to give me a big enough discount that it looks pretty good to me. I had my realtor check it out overnight just to make sure the value is there. And we've got interior pictures. So that's unusual, but very helpful. Interior looks pretty good. We're pretty confident on the value. So yeah, looking good. We're excited to go forward on that one.
Is it a note or a CFD or?
It's a note. It's mortgage that's just finishing up. And then if we can finish out the foreclosure, we'll turn around and sell it. I figure we'll have this one done before the end of summer. So that's awesome.
I'm sure the way Nathan, I'm sure you guys all know, Nathan's structured. Nathan is a short-term investor kind of with notes. He doesn't want to hold things too long. It's just something he just doesn't do. So if it, for us, I like the performers, and hopefully Nate don't get into that in the near future.
We
to see
are,
what's
in
going
fact.
on. But,
Yeah, and that's a shift that we're taking on this summer when our fund is this close to being done, and we'll start raising money here in the next few
Awesome.
weeks. But that's a big shift. We're going to be holding on to the performers for the first time ever. So
and if you guys missed it, we actually did a Facebook Live with his attorney a few weeks back.
Yeah,
probably more than that even. So I think for us, we have private equity, we have cash for ourselves, and if we do need capital, we go to a debt level where we have pretty good angle on stuff.
Yeah.
And it's interesting too, because a lot of times we get stuck with deals where, we borrow money at a debt level. Sometimes we need to, but, and I'm kind of doing a little transition here. I think that what we've heard about and we've talked about and we discussed at conferences and whatnot is like, how can we take the inventory we have and make it, even more? How can we, without selling anything? I don't want to sell a partial, maybe either I don't understand it or I just don't want to, but I want to leverage that. And then another topic that comes up a lot is, entities. And I've talked about IRA investing. I know, Nathan, you're unable to do IRA investing, but in my IRA, there's a question about, do you do an LLC IRA or a trust IRA? And then what I've come across, a lot of people asking why LLC is ever chosen for notes, right? And most people do real estate in LLCs. Most of the stuff you've done LLCs, right?
LLCs are by far the most common. I get that all the time. So I don't have an IRA because I'm Canadian, but I on a very large basis actually I use investors' IRA money to put it to work. And sometimes it comes through straight from the IRA, other times it goes through an LLC, and I haven't gotten involved in any kind of advice on that because I'm not the guy to ask on that and get accurate information, but something to figure out. But then there's other ways to do this as well, and we're learning more about that, and that's why we're here, and hopefully we can learn something here today and along with everybody else.
So it's amazing, we look for people to join our Facebook Live to kind of learn for ourselves and share with everyone else. And I love the fact that people come on here and comment and do stuff with that, because that's valuable to me, because questions I may not realize.
Right.
So I think for me, if you can do stuff like that, it's awesome. So I've seen Phil post in multiple groups, which is great. I've seen Phil do a lot of stuff for real estate. And most of the time, I'm not sure exactly what he's talking about because I have no experience in it. And I'm not jealous of him. I just wanted to get around him and talk to him and, get around people. As we shared previously before we got online, we want to be able to be in a room when a deal comes up and be able to play the angle and find the angle. And the more knowledge we have, the more opportunity we get, our ability to find a way to make a deal work. So
and as much as we've both had people come to us and say they've learned something from our talks and things, and so have we, and that's no lie. And I've taken nuggets from several of our speakers and be like, oh, that's a good idea, I'll try that. And so this is we're all learning together here, so this is good.
So guys, I like to introduce Philip. Philip's been around notes and real estate for a long time. So Philip, welcome to our Friday Live. Can you share how did you get into real estate notes? What's your background, my man?
Sure. So I'm Philip Klinck. I live in the upstate of South Carolina. I've had my real estate license for over a decade. Didn't really use it that much and didn't really like the retail side of selling real estate. So when I found the investor side, it was much more interesting to me. And I started going to local meetings and just meeting the local investors and seeing what they were doing. Well, I didn't have any money. So at the time, I had to find a strategy that allowed me to do deals with no money or very little money. The first one that I started doing was buying houses subject to the existing debt. And so trusts came up in that. I was told to use a trust. It doesn't work how everybody acts like it works, but it is good to put it in there just because. then I didn't want to manage. I'd never managed property before, so I always bought and then seller financed immediately, whether at the closing table or right afterwards. So I started out almost in notes. I had real estate for moments or months, and turned it right into paper. And another reason to do that was to recoup the back payments that I had to pay to get the property.
Yeah.
So that was some of the thing that I had to do to get going. Getting notes in general. Sorry, I've got family here with me.
No problem.
But, going from notes to other types of deals, exchanges, things like that, was more going to national meetings. So I go to the Society of Exchange Counselor meetings, and they do everything, exchanging notes for property for notes, options, just every type of situation you can do. And I think most of this was brought down from Wall Street. They do all the same things, and these guys just do it strictly inside of real estate.
So why does somebody want to trade something rather than sell it?
A lot of the time, especially with real estate, is to go straight into the next transaction. If you go from an illiquid type of property, let's say land, to cash and then to something else, most likely you're going to take a discount. But if you take land and trade it to somebody who builds multifamily on land, they may take it at full value for a limited partnership in their multifamily or for a property outright. And so you can go from something that doesn't produce income straight into something that produces income, and they get something that they can get some lift on. So it has to be a match. It has to be something that works for both sides.
Interesting. And then you meet these people you said at national conventions and things like that?
Yep. The Society of Exchange Counselors has 8 meetings a year. And then the NCE, which I don't really go to, they have meetings. And then there's regional meetings, local meetings. There's lots of these exchange type meetings.
So it kind of sounds like notes in that way, where there's kind of this hidden society, kind of the club that nobody knows about until you know about it, and then all of a sudden you see, oh, there's lots of people doing this.
Yeah,
that's really cool.
And they have to know a little bit about everything, because everybody ends up with something. They end up seller financing a commercial property, and now they have something that's going to zero, and they want to get back into real estate. So they're there to trade the commercial note and go up. Maybe they own something outright for $1 million. They took 300,000 down, and they've got a $700,000 note. Well, that's a good 25% down payment on a large multifamily that you can get good good debt on right now.
Wow. So you're leveraging
really
the note you own to basically get into bigger and better things and leverage it through. And what's the vehicle you typically leverage that through?
So it depends. I put everything in trust, and we have one LLC that's the beneficiary of all the trusts. And then we have trustees that, depending on the deal, different trustees depending on which property it is, if it's in an IRA, it has to be not somebody related. So we just put different trustees on there. But the trustee is not that important. They just sign the papers for you, and you can change the trustees with a simple piece of paper and take it to the county and file it. So it just has to be a notarized appointment of new trustee.
So for those who are unfamiliar, share what the big difference between an LLC and a trust. Why trust versus an LLC? What's the benefit of it?
And how are they different in the setup as well?
Yeah, for me, it's really easy to form a trust. You can form a trust in front of a notary. So I can form a trust in 5 minutes and assign the beneficial interest 1 minute afterwards. I don't have to consult with a governing body to create my trust. LLCs, you're supposed to. I bet 99% of people don't do this, but you're supposed to keep meeting minutes and all sorts of things to keep it compliant. But most people don't, and they just say they do. Trust, you don't have to do any of that. You just have a trust, and it holds your whatever it is, everything. You can put your suits, you can put everything in trust if you wanted to.
So why is trust so safe? First off, and why is trust a easy vehicle to transfer an asset?
Well, the trustee is the owner for record, but they're not liable for anything. The beneficiary is the true equity holder. And so they get all benefit from that trust, but they don't have any liability either because they're just the beneficiary. So it's a good way to split up ownership and equity, and the ownership isn't liable. So it's, if it gets sued, if the trustee gets sued, they can't be sued for anything. The beneficiary doesn't actually own it, so they can't be sued for anything. So if something happens that, you know, and now obviously just like with an LLC or any corporation, you can pierce the corporate veil if you do something fraudulent, but that's the only thing you have to worry about. Just don't be a fraud.
So for those who are unfamiliar, when I want to sell an asset in my LLC and sell you a note, I got to create an assignment, a launch, purchase sale agreement. I got to sell it all to you and create all those documents and transfer it and record in the county records. I'm gonna play dumb here. You got to do the same thing with trust, right?
You could have 100 notes in a trust being held by a trust and just assign the beneficial interest of the trust if you wanted to transfer ownership of all of those. Now you have to do your own due diligence on, are they leveraged? Do they have, you know, good, are they real notes? What are they secured by? All that stuff. But if you're sure that all those are good notes and they're secured well and there's nothing wrong with them, then you could just take that trust to a notary locally to you and assign the beneficial interest in front of a notary.
So it's amazing to hear, because we will do assignments and launches all day long to other investors, where if this is a trust, I literally can just assign the beneficiary. There's no assignments, there's no launches, because literally the name of the entity who owns it doesn't change.
The trustee is the same person. Yeah. But that never changes, or unless you change it at the same time. You can make a different trustee or co-trustee. You can do whatever you want, really.
That is really interesting.
Wow.
Just trying to get my head around that. That's really cool.
You know, it's amazing because we all play with this assignments and launches and, you know, LLCs and stuff like that. And I know this is really big on real estate because this is a way to avoid, you know, the tax on the sale price and everything else, because it just doesn't sell. It never actually sells because the beneficiary changes. That's it.
Yeah, transfer. It's a transfer of ownership where only really the IRS knows, because you have to claim the income. But for everybody else's purposes, nobody else really knows.
It's just awesome. So when you go to the recorder, the notary's office, what do you typically need? One of the questions that Brian asks is, what do you typically forms you need to create that trust?
Well, you'll need the trust documentation. So you'll need a trust, and they're a little bit different for each state. So you might end up paying $1,000 or $1,500 just to have a local attorney that's familiar with real estate form a trust for you, a revocable trust that has everything in it that state likes. So it's kind of a one-time deal for that. And then as far as any other documents you need an assignment of beneficial interest and an appointment of trustee. And you can appoint new trustees and assign beneficial interest all you want with an ID and a notary.
Amazing.
That sounds really interesting. So how come not everyone's doing this? Like, is there a downside here, or is there a reason why somebody would not do that?
I think it's just not understood, and it's not, most of the time people are not doing enough deals where they get annoyed forming new LLCs. You know, if you're doing 100 deals a year, you do not want 100 LLCs.
Right.
One LLC is plenty, and then you can just put everything else in its own individual trust.
Wow.
Huh.
And do you typically do this with real estate brick and mortar and notes, or one versus the other?
Yeah, each real estate transaction goes into its own trust, but the notes can go into the LLC or their own trust. So you could have one trust that holds all your notes, just because there's not much liability with notes. Almost
Yeah.
not.
Yeah. You're not worried
I don't
about
know what there is, but not much.
Yeah. There's not as much, you know, falls or lawsuits that come out unless you're doing something really criminal, which is crazy.
Right.
So, you know, I'm amazed with the conversation of this whole collateral assignment thought process of being able to leverage an asset without selling it. Can you share a
Yep.
little about what your knowledge about collateral assignment is and have you used it before?
Yeah, so I've got multiple notes that I hypothecated, and so you basically just put them up as collateral, just like a free and clear rental house. You just say, hey, I'm going to give you first position, and we're going to create a note that secures that. And so the note that secures it can be for whatever you want. It can be a partial, it can be a loan, it can be, I'm going to buy your note and give you an option to buy it back. So you can do whatever you want within the legal bounds. And when you put it up for collateral assignment, it's going to be a loan or a partial. But if you actually sell the note with an option back, that's even a little safer, because if they don't buy it back, you just keep it. You don't have to worry about getting the collateral, getting the actual note.
Can you give us an example of what you've done with collateral assignments?
Sure. I mean, I got a couple of the very first notes that I got. It was a trade. So I got these little maybe $58,000 notes, 2 of them, and they were 5% interest, but they ballooned in 4 years. Well, they're not very saleable until the balloon's very close, or and so I put them up for a loan against them, and I borrowed 25 and 28 against each of them, and I'm just waiting until they balloon out.
Mm-hmm.
Wow.
So that was one. I mean, there's a bunch of other ones, but that's probably the
Yeah,
easiest. for
and
understand.
what do you typically do? I mean, you're finding someone who will give you money against a loan, and is that hard to do, or is that a sector of people that we're just not familiar with?
It's just like any private money that you would borrow against a house. You just say, hey, I'll give you my first position and I'll pay you this much against the first position. So you're literally just subordinating to them. So now you're in second position with your note, and they have first. That's not exactly how it works, but just think of it that way.
Okay.
You're giving up first.
So that whole idea of trading is really interesting. It reminds me of like when I was a teenager in our church group, we played a game called Bigger and Better, and we'd all start, and I think we started with like a toothpick or something like that, or a nail, or something stupid, and we'd have to go around and just like randomly knock on doors, go to friends' houses, whatever, and trade up and just say, hey, I'll give you this toothpick for something bigger and better. And it was hilarious. By the end of the night, you'd have guys that came back with like a broken down car and, whatever, all kinds of just weird stuff.
It's a challenge.
Yeah. But one man's junk is another man's treasure, and that whole idea. And so that trading idea, if I think about it that way, that makes sense to me, where I've got land. To me, land is worth nothing, but to a builder, that's gold.
Yep.
Gotcha.
To somebody that knows what they can do with it. That's right.
Yeah.
Yeah.
So someone posted about collateral assignment versus absolute assignment. Are you familiar with those two terms?
Yeah. So just an absolute assignment is you're just assigning it because they're buying it, and you get cash, they get whatever it is you're selling them. Collateral assignment is for a loan. You're going to get a note against it, and some kind of terms are going to be there. You're just putting it up as collateral.
Okay.
And they do this. This came from Wall Street. I mean, they do this all the time. If you've heard of the repo market, they put up treasuries as collateral and get overnight cash. And
wow.
And we're doing the same thing. It's just not overnight, and it's not as cheap. And they do it on a massive scale. Yeah.
Yeah.
So
what kind of problems? Sorry, go ahead, Nate. Go ahead.
I was just gonna say, how long you've been doing this? Like, how do you build up that network?
About 5 or 6 years.
Okay.
For the actual exchanging, we had an old exchanger come to our group that he actually did deals with Peter Fortunato and Jack Miller. I don't know if you've heard of those two guys.
Oh, yeah.
John Schaub.
Mm-hmm.
So back in the 70s and 80s, they just had to. It wasn't, we want to do exchanges. It was, there's no money, there's no credit, and we're going to have to exchange or we can't do any deals.
Okay.
And so they did a lot of this stuff because of just necessity. It didn't have anything to do with anything else.
Huh. What are some of the risks to doing collateral assignments?
Well, just like putting up anything that you own, if you put up a rental house and you don't pay, then they can take it. And if you're collaterally assigning your note and you don't pay, they get your note. And most likely, if you're not paying, it's because the original collateral is not paying. So probably whoever is paying my note, they're not getting it rented out anymore. Somewhere there's a breakdown in the income.
It's like a landlord not paying the mortgage payment. I get you.
Yep.
Yeah.
Gotcha. So what happens if that goes to court? What typically happens when an assignment isn't fully paid, or what typically happens there?
It's just like a foreclosure. You're going to have to go through a foreclosure, or if it's a trust deed state, you'll go, foreclose that way.
Sure.
And obviously it's quicker. So,
Yep.
But same exact thing. So when you're doing those things, make sure it's worth it to you, and understand that you're going to have to pay a lawyer to get this piece of collateral for you. So if it's a really small deal, a good way to do it is just to do the full assignment and with an option to buy back. Just give them the option to buy back, or you give, whichever direction you're going.
Gotcha. It is such a cool idea, because it's something we never get into just because of creativity, and just as we said before, a lot of stuff we do is very vanilla, right? Notes, to most brick and mortar, notes is like really crazy idea. In collateral assignments and partial loan stuff is more intricacy and creativity. Now I know Patrick posted a question about the application lender, as you're right where you want until you fulfill the terms of the Newton created with them, or I guess a note with them. So with these collateral assignments, how much can you leverage? I mean, is there a cap on stuff, or is just how creative you can be?
Yeah, it's going to be up to you and the person providing the cash. If they think there's plenty of collateral and it's a good enough rate, they might lend the full amount. I don't know why they would. They just buy the note at that point. But it doesn't. It's just up to you and the person that you're doing the deal with. Maybe they don't want to own it. Maybe they want to lend, or maybe there's a blend. Maybe you've got 10 different notes and they're lending against the 10 different notes. They don't want to ever have to worry about having to go take those properties and do anything with them. They want you to have to deal with that. And I wouldn't want to lose whatever it is I have. So if I stop getting paid, I'd just take care of it. They would never know. I just keep paying them.
What's the typical interest rate on these loans?
So I've gotten everything from 6% to 12%. It just depends on what it's paying and what kind of collateral it is. Those first notes that I got were low interest over, they were seller finance. So the houses were probably worth 50 and they were $58,000 notes. It just depends on the collateral, the original collateral.
Mm-hmm.
That's awesome. I mean, I love the fact that you have to be very creative, because that's a game that you can always win, because if you're the most creative person in the room, you can get almost anything done. Sometimes you have to outsmart people just by being creative and thinking outside the box. And with the trust being able to be almost a better shield than LLC, and the ability to transfer things so much easier, typically. And then with the collateral assignment, you can leverage portfolios, because most people want to buy loans and look for people who will lend money on loans. Listen, I'm going to buy a loan, but I want to borrow money from you to buy notes. Unless you're doing big scale, that's not common, right? Unless you're doing large stuff, you can't. I'm going to borrow 100 grand to go buy notes. Good luck. You're not going to find that lender willing to do that.
Right.
But if you can find the way to buy some notes, right? And even if you start small and be able to leverage that into additional assets at a decent interest rate, you have a great way to jumpstart your situation.
Well, and the best way to do that is get somebody else with money to buy the notes, the first notes that you go buy, and then borrow against it, because they don't know how to do any of that. They don't know how to buy the note in the first place, and and buy performing stuff so that you can borrow against it and you have income to pay the payments. So get them into some 7, 8, 9, 10, whatever it is percent, yield notes, and then borrow some money against them at maybe 70%, 60%. So you get some more cash and go get some non-performing and then get those performing, and then just rinse and repeat. But you kind of got to make them rich while you're making money.
Make them happy.
Yeah,
Right.
Sure.
So are most people, where you're in, are they in certain areas of the country doing this, or is this a nationwide kind of thing that we're just not familiar with, just like notes?
Yeah, it's nationwide. You know, guys in New York, California, Colorado is big. There was a lot of exchanging. So there's a deep pool of exchangers in Colorado. For hundreds of years, they've been exchanging. So they've got a kind of the jump on the rest of the country.
Wow.
But yeah, there's a lot of people doing it, but there's not a lot of transactions happening necessarily right now. When there's a lot of cash in the system, there's not a lot of exchanging that even really needs to happen. There's just,
Gotcha.
if somebody would pay a 2 cap for something, why would you need to exchange or do anything
Sure.
else?
Yeah.
So that's amazing, because I think that, you know, for me, you can exchange anything. And is there license requirements and stuff at all?
Not in the free states. I don't know about California and New York and some of the places where they like to regulate everything. But yeah, there maybe there's a license somewhere, but you do have to follow the 1031 exchange guidelines.
Okay.
And those were there before the Starker exchange, where you can sell something for cash, have a qualified intermediary hold the cash, and then exchange. So that's kind of new to the exchange world, relatively, in the last whatever it is, 70 years. They were exchanging, and they had exchange rules in the tax code way before you did any of that stuff. So you can't have let's see, prohibited exchanges. So you can't exchange gold for real estate and not pay a tax. You can exchange anything for anything, but you're gonna have to pay a tax.
Okay.
It'll be a taxable event. So a note for real estate is a taxable event. You don't pay all your taxes up front, but you have to start paying taxes based on that note.
And that's why you say like the IRS knows about this, but really nobody else necessarily.
Right. Yeah. You got to pay your taxes one way or the other. So they know about everything, and they don't really care about how you hold stuff. I mean, if you lease option something for 30 years or more, they consider you the owner. They don't care that you don't have the deed to it or any of that stuff. It's just a matter of equitable title. Contra deeds, that's just equitable title. You don't have the deed, but that doesn't matter to the IRS. You're getting taxed on it, and you can depreciate it and all that.
Sure.
Jesus Christ. How about with IRA money? Can this be done with IRA without a problem, or?
Yeah. So one of the things that I started with was my dad's IRA. So we opened an IRA. The first 2 deals we did were inside the IRA itself, and had to go through all the forms and nonsense that you have to do when the money's being held by them. So we got an LLC pretty quick. Put all the money in the LLC. So I would suggest that. Rocket Dollar, I haven't transferred his over to that, but I know a bunch of people that have Rocket Dollar for their IRA, and it's real seamless. I don't think they do it at all where they hold the money.
And I'm presuming Rocket Dollar is a custodian that allows you to do self-directed, where you're doing checkbook IRA stuff.
Yeah, and they only do that, I think. I don't think they'll hold it.
Yeah. So for those who are unfamiliar with checkbook IRA versus IRA, is that most of the time when you have an IRA, you're going through a custodian. You have to go to them. They are great to oversee a situation, to tell you if something's wrong with it or whatever. But you can also self-direct it with a checkbook, where you literally can have a checkbook to an account and write out a check right now and buy whatever you want in IRA. There's no one overlooking the situation. So that if you're unexperienced with it, I wouldn't recommend checkbook IRA off start your head, because there are limitations that you may not be aware of. But yeah, there are companies out there that allow you to do a checkbook. They set it up, they have the background, you can ask questions, and you basically set up an account, and you can write checks out of it whenever you want to.
But notes and options are perfect for IRAs. There's almost no way you can mess up by buying those instruments. You can mess up by buying real estate, and you can do stuff wrong. You don't want your whole IRA liable because somebody slipped and fell on one piece of real estate being held in your IRA.
Right. So Dave mentioned you were posting on Facebook and things. Are you teaching this, or are you, what's your deal?
No, I just post stuff that I'm either trying to sell or trying to buy or raise money on, or fishing. Sometimes just post something to see what the interest is in that instrument. Maybe a big note that pays off really fast. We were We had one against a property that was a 3-year note. It was a big $3 million note that paid off in 3 years. Well,
Wow.
it didn't pay any interest, but it paid off real fast.
Yeah.
Well, if you had a portfolio of 6 or 7% notes that had a 30-year term on them, and you were 80, you might want to swap for that.
Gotcha.
You lose the interest, but you shorten your duration.
Yeah, you get your money back faster. So if somebody wants to learn more about exchanges, where would you recommend them starting?
The Society of Exchange Counselors website, which I think is SE Counselors, has some good information on their website.
Okay.
And then the NCE, I think it's the National Council of Exchangers. I'm not familiar with that one, but that's they do it as well, and I think they have good information on theirs. But there's local meetings, so you can seek it out. There's CRE in Kentucky and OCRE in Ohio, and there's some other local ones, and there's one in the one in Colorado. I don't remember the name of that one, but they're all over the country.
It's amazing because there's license to become a note broker, right? You have to become a note broker through a license. Where exchanges, can you broker an exchange? I mean, is that possible? If I see you guys have something and I connect you guys and I get a cut of it?
Well, and I'm a licensed agent in South Carolina, and so I can broker and I can co-broker with people in other states and I try to do that with large transactions that I'm not going to be a principal in. But yeah, you're going to need either a real estate license, or if you're in a state where they require a license for note brokerage, you may need to do that. I think with note brokers, you're probably going to need to be doing some type of volume to need a license. If you're just doing a note here or there, I don't think it's going to be a big deal.
Yeah.
Right.
It's so cool because it's a Wild West. We thought we were a Wild West, Nathan, and you hear this and this is even wilder West, because then mixed notes look like a vanilla real estate transaction nowadays. Like you're leveraging, you can literally sell a note to go get a boat. I mean, that's the kind of stuff that's nuts, right? We could pay college tuition with that kind of stuff. I don't know, but but what's the craziest kind of exchange you've seen or heard of that's just so we can get creative for a moment?
Well, a lady one of the bigger ones that I saw, a lady bought a house on the water on the coast of South Carolina, and she bought it in 2011 or 12, so just stole it. It was $1 million, and it was worth about 5.5, if I remember right, recently.
Wow.
And instead of selling it, she just exchanged it for a triple net property, that just direct exchange.
Wow.
Because she was getting older, and she wanted something that would just, for the next 30 years, it's gonna pay.
Yeah.
It was a CVS guaranteed lease.
What?
Dang,
And
that's cool.
you're just basically transferring deed ownership to it then, or lien ownership of it. And you get this one, I get that one, you swap it. That's
It was just a deed for deed transaction.
Yeah. And that's just, I know people with rental portfolios who want to sell off, right? And they want to go buy something else. And there could be a possibility of I want to get into commercial and I have a bunch of rentals. Well, maybe someone who wants to get out of commercial, wants to get into residential, could make a swap. Is there online exchanges where you can find more people that I want to buy a commercial building and this is available to a match.com for exchanging?
Kind of, but I find that even over Zoom, it's hard to make a transaction happen.
Mm-hmm.
You really need to be in a room with the people, go out to eat with them afterwards, and really talk the transaction through. It's hard to do a $5 or $10 million transaction not in person.
But I mean, just to know the fact that Nathan wants to sell a commercial building, he wants to exchange it for rentals. Just to know that how do you find out that Nathan wants to, or if I have assets I want to exchange, how do you find out what I want to exchange?
Yeah, you hang a sign around your neck, or what do you
Yeah. You'd have to go ask everybody. I post, if I have something for sale,
Okay.
I put on there, will seller finance, will exchange, will take property in as a down payment. I mean, I put on there all the different things that I'll do. So when people search,
Okay.
they can find that. and people are always trying to make a deal on, Facebook Marketplace or somewhere like that. And I'll do a deal with them, but I got to know what they've got and value it and all that.
Sure.
Because no one knows what you want to exchange without it being public. It's just not, and I would think in exchange, you're right. You need to be handshaking and get to know it. But just to connect the two people to say, hey, listen, I have something. I'm looking for your rental properties, or I'm looking for commercial space. Hey, I got this big home that we're looking to exchange, and just be able to swap it and know it's out there. That would be cool if it had that possibility.
Yeah, if it was like the problem is they don't know what they want. The sellers don't really understand most of this stuff. But there's a lot of people that own a ton of property and they have no clue what the next step is.
Right.
Gotcha.
So, they knew that they made a lot of money in whatever business, and they knew that if they bought CVS's, they won't go away. And then they end up with CVS's and they don't know what to do after that.
Gotcha.
Mm-hmm.
So you kind of have to counsel. That's why it's the Society of Exchange Counselors. You have to counsel them on what is it you really want to do next. And also, I wanted to bring up, what you guys do. You end up with performing notes or property after you take it back. One thing that I like to do is I would like somebody to put up a free and clear property and don't give me a down payment. So let's say I've got $100,000 house, but I can sell it for $125,000 owner finance, right?
Yep.
I'd rather them give me a free and clear property as additional collateral, and now my note is more saleable because it's 50 or 60% loan to value.
Gotcha.
So think about if I have a 9% note that's 50 or 60% loan to value secured against two properties. That's in the secondary market. That's easier to sell. I don't have to take a discount on most at all.
Right.
So really, the note's covered by two properties, not one.
Yep.
Wow.
So I like to do that rather than take a down payment. It's harder to get 25, 30% down from a regular owner finance buyer.
Yeah,
if I can
of
get
course.
zero, I'll take zero down if you'll put up your free and clear rental.
But would most people who don't have the capital to put down have a free and clear house?
Well, think about a rental portfolio guy that's got 3 or 4 of them, and he doesn't want to go to the bank.
And he wants to sell finance most of the time. Hey, listen, can you sell finance this note to me? You're like, I can. And he said, listen, I don't got much to put down because I'm cash strapped in this situation.
Or the house that the house that you get back. You get this non-performing note, and you take back the collateral. Well, you either have to flip it, or you can sell or finance it to somebody local that will rent. And you can sell it for more seller finance with zero down if they can just put up some additional collateral.
Hey, sorry guys, 1 second. Be back.
Yeah, no problem. So I'm intrigued by that because it make a lot of sense, because most landlords who are looking to increase their inventory, don't have cash. That's why they go seller financing, right? They find the seller financing notes, which is often difficult to find. But with being able to leverage, is there a way to do where maybe they can put up, if they're still have debt on other houses, or a way to kind of structure it that the equity of the other house, and maybe it's not 50%, maybe it increases that percentage to that fact that, hey, listen, I got 50% equity in this house, and we use that as collateral as well.
Sure. It's all up to you. If you're willing to take a second against a house with a lot of collateral, that's fine too. And just think about your note buyer. Let's say you get performing notes, good and performing, and you go to the big institutional buyer that pays too much for everything.
Yep.
They're going to like that more than they like a single note against a house with a 10, 15% down payment.
Yeah, absolutely.
More collateral.
Jesus, I never. This is cool stuff, man. I appreciate you jumping on, because I don't think anyone ever talks about this kind of creativity.
Yeah.
And I talked to a lot of landlords like, listen, I don't got cash and I got strapped. and they teach you the secret of finding ways to be creative to find loans and private equity people and borrowing money and, you know, seller financing, but never talk about leveraging their other properties. The BRRRR strategy is always, you know, the rinse repeat kind of situation, refinance, refinance, refinance. But you don't have to refinance because you can just use it leverage.
Yeah, or use a note that you have. So if
Yep.
I've got a $75,000 note against a $100,000 property, and I go, hey, I want to buy your rental, but I don't want to give you any cash down. They might say, well, that's I'm not going to do that. Well, but I can give you a first position against this house over here as additional collateral
Sure.
because you have first position. You are the,
Yeah.
you know, so you're giving them a ton of collateral. And if they can
Wow.
understand it, if you can convey that to them,
Yeah,
they
that's
should
hard.
take
Like,
zero down. You know?
yeah, because then literally, if something happens, they have a lien against the property that already has equity in it.
They'll probably get bid in at the sale. They probably won't even get the properties.
Yeah,
They'll just
yeah.
get full cat, you know, all in
Yeah,
money.
that's a down payment and a half. Cool. Well,
So I like collateral better than I like cash down payments.
Sure.
yeah,
Yeah.
yeah, that's amazing. I've never even heard people at conferences talk about this stuff. It's
Yeah. No, first time I'm hearing about that. That's really interesting.
digesting and stuff over the Friday weekends would be crazy.
Yeah.
Well, and if you really want to make a note liquid, that's the way to do it.
Yeah,
So if I'm trying to
because
sell
most-
everything, that's what I want to do.
yeah, you're really not selling anything. You're really just exchanging a situation versus get cash, and then you now have to go find another asset anyway to get into where I don't have to sell anything. I'm just exchanging it. I'm skipping a step.
Mhm.
Well, I'm taking their collateral. So they're going to be paying me for my house. I'm taking their collateral as additional collateral. And I've got a super liquid note that I can sell at any moment, or I can just hold it,
Yeah.
whatever I want to do.
Yeah,
Hmm.
that's cool. Well, guys, if you have any additional questions, Phil, you shared some awesome stuff today. I appreciate it. You know, this is stuff that we want to learn about and digest and, you know, re-listen to stuff. Again, if you want to listen to the podcast, you can, or the YouTube video we post on the Facebook group. But re-listen to stuff. I want to hear some people doing this stuff. I'm going to see if I can leverage some of our portfolio. And I have some partners with rental properties. We're trying to sell them. And this may be a different angle for them to get into because we're trying to buy some more commercial stuff as well. And it's a way to kind of exchange it. And it's an education to the buyer usually, or seller, vice versa, to teach them about this little angle that is much more valuable to both sides than selling an asset and stuff like that.
Yeah, really
So you said you've
interesting.
got some rental properties that you're wanting to sell?
Yeah, we have some rental property, yes. So it's an interesting angle. They're a lower end city area, so it's not a great area, but yeah. So there's a portfolio of rentals that, you know, may not be a desirable thing to sell, but for an exchange, it may work.
Well, and I'd go find, the people that in that area that have a large portfolio and say, I'll give them to you and nothing down if you'll secure me against all your other stuff.
Wow.
Hmm.
That's a
Because they've
seller
already,
finance
they're
and a
there.
half.
Yep.
Yeah, I got a couple of those as well. Interesting. Okay.
Yeah. You just
And
have
you're
to
selling them full price.
Yeah. You're just not getting cash. You're 1031ing it really.
Or you're just creating paper.
Yeah.
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 Just going straight to paper. And full price paper. And maybe higher than full price paper. Because they're not coming out of pocket for anything. Just
Right.
make them be able to cash flow or break even. Just say, hey, just hand them to them. Here you go.
Yeah.
Here's a bunch of break even stuff. Now you own it. I want one note secured by, cross collateralized across all these
Yeah.
and your stuff.
Well, Victor Wagner said,
and
thank
like
you,
you
by
say,
the
it's
way.
kind of a short-term thing, like 5 years.
It's up to you. You can do whatever you want. But when
Right.
you've got tons of collateral, you don't
Yeah.
need a balloon.
Right.
If you've got a high enough rate and tons of collateral, who cares? You'll sell it for almost par anyway.
So Brian asked cash flow. How do you have cash flow? Can you explain that to him? He's
On just in general,
yeah, cash flow. I guess the fact that if you sell an asset, how are you getting cash flow for the new asset? I guess Brian, if you can correct me if I'm wrong there, but how are you typically, if you're exchanging an asset and you're going to get immediate cash flow, how does that typically happen?
well, let's say I have asset that has no cash flow, like land. I can exchange $1 million piece of commercial land for something that has income that somebody else has already done all the work on and they're finished. It may be a low cap rate. It may not have no upside to it, but they want the land because they can create a lot of upside. They might make $1 million on my land, but I don't have the money to put into the land. I don't know how to do it. I'm not a land guy.
Mhm.
I may have got the land in exchange, but didn't necessarily want, but I took it to sell something else. So oftentimes people that do these exchanges, they might take $1 million piece of land as a down payment and $3 million in cash, and then they have to figure out what to do with the land.
Okay, because it's a good deal.
Because it was a good deal. They got full price. The land really is worth $1 million. It's not that liquid. It doesn't sell super fast, but it wasn't a fake million piece of land.
Yep.
It was a real million piece of land. Just might take a year to sell. And it has
And your
no income.
property's worth my property's worth 950, and you're gonna get $1 million property instead of 950 or 900. I'm gonna get $1 million in a collateral. Yeah, hell yeah, I'll take that exchange.
Well, you might, let's say they're both $1 million and yours pays 6%. It's a 6 cap property. And
Yep.
mine's just $1 million piece of land. But my $1 million piece of land in 2 years after doing some engineering and what it might be a $2 million piece of land, right?
Correct.
So there's lift in mine. There's no lift in yours. Just six caps, not going anywhere. It's as good as it's going to get. But I might
You
be
want the
fine with
cash
that.
flow.
I want the cash flow, and I already got $3 million on the other property I sold. I just took the piece of land because
Because the deal is good. That's awesome.
I got full price.
Mm-hmm.
Yeah. What a way to get
That's
out of a
really cool.
situation that's difficult to get out of, or to get a better price maybe than you can get because someone's desperate to get rid of something they don't want, because they can't do it with it. That's cool.
Yep.
Well, Brian, hopefully you answer your question. Philip, is it part of the group? Everything else? If you ever had questions, you can tag them on there. But the information you share has been awesome, man. I think it's something to food for thought that a lot of people really should think about, because you get into bad situations where deals are just bad. But if you can exchange it for somebody, because a bad deal for you could be a good deal for me, and vice versa, because of our skill sets, and maybe that leverage is equate, and we're both getting back in a position we like, or it may be a decision I don't like, but I can leverage it to go get Nathan's situation and exchange it later, knowing the fact that Nathan wants land, I exchange you for land, and I can change with Nathan and make it almost like a double close or double exchange and make it happen.
Mm-hmm.
And you can take free and clear property that you have that you don't want to sell and create paper against it to go buy stuff. So you don't have to wait to sell it and get the paper. You can say, well, I'll give you $1 million note against my land that I'm going to develop myself. I don't want you to get all the upside. I'll give you $1 million note against it, and as a down payment to buy your multifamily or whatever. So you can create paper when you own stuff and go buy stuff with it. You don't have to wait till you sell it.
So Brady asks, do you service all facets if the collateral assignment to assignee for non-institutional, non-investor savvy assignee? I'm not sure exactly I understood all that, but if you did, I'm not sure. Brady, if you can rephrase that question, I'm not following. It is a Friday, and I know it's a nice day outside. I apologize, Brady, if I misinterpreted that, but I did post it. If you can reword it before we close up, I'll definitely, Phil can definitely get onto it.
Well, and as far as like where the note was originated, I don't really care whether it's institutional or private. You just read the note and see what it is and how it was collateralized. I don't deal with banks. I've never bought anything from a bank, so I don't know anything about that part. So if there was a question, if that had something to do with it, I'm not sure. But
Okay.
I've got notes that banks originated that somebody bought, and I was the second person or the third or whatever. But
Yeah.
I just don't know. I don't deal with them directly.
I guess he says if the asset goes not performing, who deals with the workout?
I've always dealt with it myself.
So I think what Brady's asking is, Brady, correct me
Like
if
a
I'm wrong,
servicing question.
I guess is like if I exchange a deal with you, right, and you now take my note that's not performing, you own my note, I own your land. I no longer have to deal with anything that's not performing. It's you bought a performing note for me, right? You exchange for land. if that goes non-performing, it's not a partial where you can trade it back. You deal with the consequences of the performing note going non-performing.
I think I get it now. It might be on the collateral assignment. So let's say I put my note up as a collateral assignment to borrow money, to hypothecate, and my note goes bad. Maybe that's what he's asking. What do you do in that case? In my case, I always just keep paying my lender, and I work out the issue because I don't want to lose my note. There's usually a bunch of equity above the person that I borrowed the money from, and I don't want to lose my equity in the note.
Okay.
Okay.
So what happens if you don't?
I lose my note. And then,
Right.
and most likely if I stop paying, it's because the original asset is not paying. And so they're going to go straight through my note to the original asset anyway. So they're at like 50% or 40%, investment to value or loan to value in their position. They just hope and pray all day that we don't pay.
Yeah. So if an exchange there is nothing, right? If I exchange 1 for 1, there's no responsibility on the seller to handle that performing note that went non-performing, but it's no longer in the name. It's just like if you sold a note to somebody else, you have no control over what if it goes non-performing. It's
and it's just like if you exchanged a property and the lease went bad. I don't have anything to do with the property anymore. I'm not the tenant.
Yeah. As Patrick said, you hold the pink slip, right? You exchange pink slips for each other, and you now own that asset and the responsibility of it in that exchange. Well, partials a little bit different. Those who are not familiar with partials, there are sometimes in the contract that if a partial is bad, the seller will help out with stuff like that. So with exchange, it's like selling it. It's really selling it. But instead of think of it, if those who are not familiar or confused, I'm exchanging money for my note. Instead of doing that, I'm exchanging something for my note.
Right.
It's the same concept, but we're typically exchanging cash for an asset.
When instead of cash, it's something else, but that exchange still took place and you traded it. Yeah.
And I didn't bring it, but we have this pyramid of value, and at the top is cash, and not because it's the most important, but because it's the most scarce. There's the least amount of cash around, and so it's the hardest one to trade, and so it gets the biggest discount. The next thing down is maybe triple net property, and then the next thing down is notes, and the next thing down is multifamily and houses, and then you get all the way down to encumbered land or something, or something that's really hard to do anything with, very illiquid.
Sure.
Yeah, children.
So when you're exchanging, it's hard to go from encumbered land straight to cash. You're gonna have to take a massive discount, but you might be able to go from encumbered land to land, free and clear land, and then go from free and clear land to a down payment on multifamily and sign a big note for from the bank to get the rest of the cash to them. So you kind of work your way up the ladder and don't take all those huge discounts, and you might do better than just going straight to cash.
You do that bigger or better game, and you do something just a little better, a little better, a little better, a little better. Yeah, cool.
Mm-hmm. And the other way around. Let's say I've got a bunch of notes that are high rate, good collateral notes. I can go down and get huge value because it's almost like cash. Right. So if I go buy land with my notes, I'm getting a huge discount because I can just sit back and collect. Or I can buy your land and you take my notes, and I better get a good deal on the land.
Yeah. And then if you want to build on it or whatever you want to do, go for it. But yeah.
Yep.
What typical attorneys, is this typically residential attorney doing it? Like,
what kind of attorney knows about this? Yeah.
Yeah.
You need an attorney that understands it, and most of the time you have to explain it to them.
I'm teaching the attorney.
Yeah. But I found that with real estate in general. So I don't know what you guys' experience is with it, but they don't really know a lot about most of this stuff.
Man.
We always think that, you think your CPA knows a lot and you think your attorney knows a lot. Not really.
I've talked to a lot of them. They're like, listen, we don't know much. You just think we do. We look like we do, right? Because they know more than we do about their topic, right?
Yeah.
But, I'm very curious because you got me intrigued, because even performing assets that are really high yields or low yield for that matter, and you want to get into something different, even if you're going up and you're not going to get the discount you're looking for, but you can still exchange it for a commercial space, right? If you want to move from residential brick and mortar, notes to a mixed use note or a commercial building, you could go up that line and they maybe want to come down for whatever reason, and see what happens. That's cool stuff.
Let's say that you've got, and here's a way to hypothecate the other way around. So let's say I've got a note, $100,000 note, and I go to somebody that's in distress, that's got a house that's in distress, and I don't want to give them $100,000 for their equity in the house and take over their payments. I might say, well, I've got this note that pays 9%, but I would never give it to you in exchange for your equity, but I will give you a note against my note at 0% at $1,000 a month until paid off for your equity. So now I'm creating a note against my note to give them for their equity, and then I'll take over their first mortgage with the bank.
And how do you record the note on the note?
It's a collateral assignment of mortgage, and create a note and give it to them, and assign that note to them, and then they deed the house to me. So I get their equity in exchange for a note that I created against my note, because I don't want to give up the 9% to them. I want to keep my 9%. I just give them the 0%. They're getting full value, but not really. Time value of money, they're not.
Right.
Yeah. Boy, you have to teach them all this stuff too, I presume. You have to really educate the people, because they're like, no, I just want you to buy my house.
Yeah. Well, and that's why this stuff is much more difficult in a hot market.
Yeah.
Sure.
Because they'll say, well, I'll just list it for sale and get 10% over.
Yep. You're right. They're right.
Well, and they are right.
Yeah.
But in a distressed market, it's different.
Yeah.
In a flat market, it's different. I mean, if it was just a flat market, we'd be in a totally different situation.
Yep.
So for the distressed market, is that something you foresee coming down the pipe?
I stopped being a soothsayer and a crystal ball reader. I have no idea. I have been thinking for 3 or 4 years that it was going to do that. So since I'm not good at predicting, I just stopped doing that.
What's your thoughts about people saying that this is the new market because inflation's gone up, that prices are where they should be because of inflation?
The way I see it, we take on more and more debt as a country, and that's deflationary. And the Fed and the government are trying to work against that, and they're just fighting a battle. They're fighting a losing battle, in my opinion. Yeah. We'll continue to have these big bouts of deflation, and then they'll inflate or reflate, and we'll have a big bout of deflation. And it's just going to go back and forth.
Okay, fair enough. Well, guys, if you have any questions for Philip, feel free to reach out to him. He's in the group. He's in Facebook. He's very easy to talk to, very easy to learn from. Especially if you have something you want to exchange with him, please reach out to him, and he'd be happy to exchange. And he can connect you with some attorneys that can, help make that transaction happen. But as he said, you need to really kind of work the intricacies of the deal, because you're not exchanging money for the note. You're exchanging something else, and you both have to learn what the other side is before you make that exchange happen. So,
well, all those green pieces of paper that everybody likes are Federal Reserve notes. Those are just notes that don't pay interest or payments.
That's right.
So we just create our own currency and make deals with that.
Very cool.
Yeah.
Very cool.
Yeah. Well, guys, thank you very much for tuning in this weekend. We'll be back next week. And with Phil, again, check out the YouTube page, all the podcast stuff, and make sure you share this with friends if they're really interested in this kind of stuff, and reach out to us. Check out the Facebook events page and the YouTube stuff. We got a lot of stuff coming up too. We're booked out for another month or so, which is great. So stay tuned with some more stuff. Please reach out to Philip if you have any questions, and we look forward to hearing from everybody soon. Have a great weekend, everybody.
You bet. Thank you.
Thanks, guys.
All right. Cool deal, man. Thanks a lot, Philip. I appreciate it, man.
It's really
definitely
interesting
hit
stuff.
some stuff that I don't think I've ever. Let me stop recording. Yes. Okay.